Today is a special day because this week, particularly, we have around 140, 150 companies reporting the corporate earnings for Q4. So it's going to be a very, very important for the S&P. Now, the S&P ended last week and also continuing being influenced by the coronavirus this week, since we have seen another case, confirmed case in the US. We've seen safe havens taking a shift to the upside following the increase in fears over the weekend. Now, of course, this week is also very big for the monetary policy stage. We've got the first FOMC meeting, first Fed's decision. We have Brexit on the 31st, which is on Friday. So a very, very big week as well for the UK side, since we also have the Bank of England interest rate decision. I want to go ahead and start, of course, with the S&P. Going back to what we've seen, what we saw last week, actually, I was looking at this becoming an impulse move to the upside with waves 3, 4, and 5 expected, right? So we looked at this as wave 1, 2, then we talked about wave 3, a rather elongated wave 4 because wave 3 is rather sharp, whether 2 is rather sharp, sorry. And then after wave 4 finishes, then we go up for another move to the upside with minor 5, which is going to be the intermediate wave 3. Now, if we go a little bit closer, right, we're probably looking at this downside. Could take us down to 31.60, 50 and 60 or so, which is a wave 1, right? So if we get this move, most likely it's going to perhaps be a triangle, okay? I mean, given its current structure, it's very early to say whether this is going to be the case, or it could just be some sort of, complex pattern here, or WXY, or triple zigzag, or whatever. I mean, we just don't know yet. It's too early, but we're really looking for validation down at 31.50 or so, right? So if we break below that level, it means that, of course, this whole pattern should be looked with greater detail, and with the incoming price action, of course, giving us insights for another potential projection. We could get another move to the downside and then a B and a C, okay? But this is most likely going to last a little bit longer given the structure of wave 2. Now, I want to also go quickly on the Japanese equities today, right? Because they've also moved to the downside, of course, given the fact that the economy in China is going to be affected by in Asia in general, the coronavirus. I'm seeing this still impulsive to the upside, just to give a general overview, right? I'm seeing waves 1 and 2 and 3 being done, right? Since we've ended up here, right? We've have this ascending channel now, which seems to suggest to me that this correction over here, because we missed that top, right? This is an A, B, and a C, is most likely going to be a flat, okay? Given the 95% or so correction, it could be a flat. What I'm looking at here as well is that we don't want to really go below the 1, which is the 25.56 or so. We could potentially go down and create a double bottom at around the 23,000 level, which is a very good psychological level as well, which is going to be wave 4. And from there, we could be looking prices to start moving higher to take out the previous high, as well as to end in the immediate wave 5. And from there, of course, we can start looking for deeper corrections. The US index, it's moving exactly as we expected. We've had waves 1 and 2 done in the intermediate perspective. Wave 1 minor done. We're looking at wave 2 to be completed with a nice move to the upside. That looks like a nice one, to be honest. A, B, and C, potentially this is going to be an ending triangle over here. It could end anywhere between 98 or even higher, as long as we remain below that level. Actually, we could even go below that level, but in this case, that would invalidate completely this move to the downside over here. So if that was the case and we break above that level, then it would be possible that this also becomes an A, B, and a C, okay? And that, from here, of course, means that we're going to move all the way to the upside and break to fresh highs, okay? So that would also be invalidated. The thing is that with the index, things are a bit more complicated. I mean, we get mixed signals here, right? Medium and short term show downside, which seems to suggest to me that we could get a correction, this correction ending quite soon, right? And start moving to the downside. If that's the case, then we really want to see the 96.40 breaking to validate the bearish outlook.